I'm in Amazon on this example, and I'm going to be discussing uh, primarily right leg W higher patterns. And we see those most often in the price chart. Typically I look at price red and price green. In the charts I have set up here, I'm going to be looking at where the red vertical line is and the green vertical line. And both of those are higher right leg W patterns. And the differences that I'll share with you are we obviously have a zip red down spike, and zip red is at 21, and with zip yellow up high, that makes it a red spike, which means next day it's going up. So we have that additional pattern on the green line to tell us that prices are going to go up. We have on the red vertical line, we have a second day with zip pink lowest. Most of you have heard me say that when zip pink is lower, it has a tendency to go up. Zip pink is a price barometer, and we obviously have a red spike on this line as well, with zip red at 37 and zip yellow at 70.99, just about 71. So next day it should go up theoretically, and it does, but not a whole. I guess maybe if I expanded these out, we could see differences, but more so. But now, one of the key things that I want to point out to you here is that on the day after the green vertical line, all of your lines went up above the zip Zion line. And that would have happened, I mean, you could have, if you didn't see that happening, if you didn't see the right leg W's and know they were there, just looking at that evidence would tell you that you could, that would be a good stock to enter, because the likelihood of those lines coming down that day, that same day, are not good. Zip green ends up at a 100 the next day, and obviously we can see that zip Zion is lowest, meaning that the price is going to go up until zip Zion crosses under the other indicator lines and disappears. On that day we would sell out of the position and find another one. Or you could, for that matter, take it short. In this, this is a real good example here too. The zip pink has stuck its head out above the other lines, and the four, blue, yellow, red, and gray, are all down. Those are leading indicator lines. They're telling us that the price is going to go down over the next, at least the next day, and maybe more. But when we have the zip green at 100, that's a pink green top, and when zip pink is underneath the lines, as soon as it pokes its head out, that is usually the signal for the next day down. Not always, but generally speaking. Sometimes you can find the pink, zip pink will stay high, and that's normally occurs when the zip green has traveled at 100 for 7, 8, 9 days or more. And then when zip green goes down, the zip pink continues out, and what it's telling you is the strength in the market. It's told you that the market is going to continue even though the sensitive indicators are saying it's starting to go down. So they're so fast, they they can fool you at times. So always watch the zip pink line. Now, in this other example, we had zip green go up the next day to a pinpoint and right away go down. Now, it's not something that makes a whole lot of difference, and when you look at these candles, you think, well, they're not going to be, this isn't going to be much, but it is easy to think that there's not a whole lot happening. The high to low, however, in the zip in the Amazon stock, obviously it's a very expensive stock, but the high to the low was difference just on this day was $5, and it looks like, and it is a very tiny green candle. But the point I wanted to make, that no matter what price you're in, when you're trading at the open, okay, you're sitting here. Let me move this candle over. You're sitting here waiting for the open on this day. We obviously, none of the lines are there, with the exception that or excuse me, I'm saying this a little bit wrong. Let me rephrase this. On this day, we have experienced the upward movement of the stock, and we have a completed W in power green and red. The red is just a little bit above the green in this case, and we're on a pinpoint green, but we don't know that zip green is going to stay at 100. But unlike these several days over here, where all the lines were above zip Zion, over here the next day, within minutes, the fast indicator lines are going to be dropping, and in this case, several of them ended up under 50. But this price is not going to move that much before the lines go down. So what I'm trying to convey is the fact that with the lines crashing down, you can quickly identify that the price during the day is going to move down, and if not, spot it on a 1 minute or 3 minute chart much easier than you could on a daily chart. But even when I'm on the faster charts of 1 minute or 3 minutes, I always keep a daily chart open and visible. Both of these lines have high yellow, zip yellow positions. And if you've heard me say before, the zip yellow helps to control the price when it's riding high and bouncing around above 80, price tends to go up. And so obviously we have when we're back here and looking at this high right leg W with zip yellow really high, the chances of it going a whole lot higher are not necessarily there. So in other words, what I'm saying is, look at what you're buying. If you back up here and look at this example, we have a high right leg W on the day that the pink vertical line is showing us. We also have a zip green at 0, and zip yellow is at 22. And so you can gain a lot of ground in a right leg W if you go up in price. And this is obviously a swing trade move, but we know with zip yellow low, rather than buying a right leg W pattern with zip yellow high, the difference can be significant. And even in 2, 4, 6, 8, about 10, 12 days, maybe 13 days, this price here closed at 828, and over here it closed, or I should probably take the open. It opened on this day, the day after the pink line, at 762. So between your 762 and your 8, and what did I say, 828, 830, I guess it is. I mean, there's a significant difference of, you know, $60, $70. And that's the difference between spotting what you see and what you understand. I mean, we can all look at right leg W's and just buy one. But the difference is to compare that right leg W with some other indicators. And in this case, show you that, you know, I mean, how would you like to, I mean, in this example here over looks like about 12 or 13 days, that's going to be, you know, a couple, 3 weeks of time, 5 days to a week in the market. $60 increase versus going back here to a $5 increase the next day. It's just a matter of reading the indicators. I chuckle at times when I listen to things that have happened. And I can't overemphasize that you have to be a person that compares things. This is a opportunity that uses comparative analysis, and so you want to look at what works best. If you had those 3 examples to look at on the same day, obviously the one with zip yellow lowest would be the one that you would go after. Theoretically speaking, if you're in a swing trade mentality. But in any case, these are excuse me, these are powerful examples of what the sensitive indicators can do with a system that works. The right leg W is a pattern that we use, and if it's got good conditions, we recognize that it's going to go up significantly. And you can talk about next day up, which means 1 day movement, or when I say uptrend, I mean multi-day movement. So just fantastic information inside these indicators. Learn them, understand what's moving them. They'll teach you future price direction.